Hi guys, welcome to my YouTube video, and today I'm starting a new series called Analyzing Nifty 50 companies one by one, and we're gonna do a business deep dive from a fundamental investor POV into these companies and try to understand these companies, try to understand what growth rate can come from these companies. Are these good companies or not? Right? And we're gonna start with number 50th, which is Max Healthcare. Um, so Max is a hospital chain. I live in Dwarka, New Delhi, so I have a Max, like I can see a Max hospital from my balcony. So that's kind of interesting. Of course, none of this is investment advice or stock tips, right? This is a pure business analysis discussion. So yeah, if we try to understand, let's say you hear about Max for the first time, right? And you're trying to understand what kind of a company it is, right? So what you can do is you can go and try to understand the industry first, right? This industry is the hospital services industry, of course, and it has three layers, right? So Max is the second layer, where there are the specialized clinical providers, the multi-specialty and quaternary care providers providing high-end medical services such as surgeries and outpatient care. This is the company's primary operating layer, where it competes as the largest hospital chain. High barriers to entry due to massive capital requirements for technology and manpower. Okay. Then there are the payers, of course. So whenever people get avail any of the services of a hospital, the payment is either done through a government scheme, through private insurance, or they pay it out of their pockets themselves, right? What are the raw materials of a hospital? It's basically the medical devices, the pharmaceuticals, the land, and the buildings, which they either make or lease out, right? So this is how this industry usually works, and where Max Health fits, or generally hospitals fit into the picture, right? Now, if you look at another way to understand Max Health, right? We think of, okay, what are the different kind of hospitals there are, and then where does Max fit into the picture, right? Now, two of the more popular ways of understanding classification of hospitals. So one is through clinical complexity, right? So we have, actually this is in medical healthcare. There is primary care, there's secondary care, there's tertiary care, and there's quaternary care, right? So primary is like you go to your general physician. Secondary care is you go to a hospital, which is like a small clinic or a basic hospital, which probably might not have the capability to do surgeries. So then you would go to a tertiary or a multi-speciality hospital, which kind of has the capability to do surgeries, right? This is where the complexity increases. And then, of course, there's quaternary care as well, where there are like very, very complex surgeries, maybe like transplants or cardiac and oncology, or these kind of very, 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 the more difficult surgeries or services being done, right? So Max as a company, as a hospital, falls into the quaternary care division, right? It is not into primary and secondary care so much. It is primarily a quaternary care hospital, right? So this is one way. Now we're slowly getting a picture of Max, right? Another way to think of hospitals in general are the geographic market focus, right? A lot of there are pan India hospitals as well, Apollo being one. And then there are regional dominators, right? For example, Narayana Health dominates in Bangalore and Bengal. Max, for example, dominates in NCR. They have like 3 hospitals, 4 if you count Gurgaon now coming up. KIMS has its own regional supremacy in south of India, Mumbai, I think. And this is because there's a brand associated with hospitals, right? When we think of a surgery or a complex a treatment which is needed for our own family members, we want it to be the best quality possible and within our budget range, right? So these hospitals kind of gain this brand image slowly with time, with presence in a particular geography, and then the word of mouth or the brand is built that okay, this is a nice hospital, it has nice doctors, or I had a successful surgery over there. And so there is this moat kind of a quality in hospitals which comes into the picture, right? If it is affordable, you would want to go to the best quality hospital in your own perspective. You wouldn't want to go to the second and third quality hospital if you can afford all right? Just because they're cheaper. So Max kind of falls into the metro-centric premium category, right? It's not so much in the tier 2, tier 3 expansionist hospital chains, which are also there. This actually this has a lot of effect on the kind of revenue quality in terms of the RPOB that Max earns. But we'll get into those key variables later on. But with this discussion, we are already forming an image of Max that, okay, it is a multi-speciality, super speciality kind of hospital, which is primarily metro-centric and premium, right? Those are the image of Max which has been generated within our minds already. Right, in terms of regulations, you can check we can actually circle back to this when we understand more about the business and if these regulations really affect Max. In terms of tailwinds, there's a huge tailwind in hospitals, and it's been there for a long time, which is that India doesn't have enough beds for the kind of population that it has, right? So that's why I was just hearing a video on hospitals by Ishmohit of SOIC, and he was saying that these hospitals have gone on a massive capex throughout the 2010s to add this bed capacity. And in the 2020s, in the last few years, we have seen that revenue play out. Because the interesting thing about hospitals that it is a hospital can be a long-term project, right? You buy the land, you build the building, you start operations, you break even, you start earning money, and then you reach some sort of stability. And sometimes this can last for 5 to 7 years, So this is a very capex intensive, a very hard asset business. But at the same time, once you have that brand build, once you have once you reach that level, then through maybe brownfield additions is one way where you can maybe start earning much faster after that, So it's the quality of the business that we are studying, right? It's nothing good or bad about it per se. In terms of headwinds, I wouldn't go too much into any of these as of now, and we can continue into understanding Max as a company, right? So now Max, we've understood from our industry analysis that it's sort of a multi-speciality, super speciality, metro-centric hospital, right? It is actually one of the largest hospital chains by market cap, and it operates a total of 22 facilities across Delhi, NCR, Punjab, Uttarakhand, and Maharashtra, right? So Nanavati Hospital, which is in Mumbai, got is taken over by Max, and now it's called Nanavati Max Super Speciality Hospital, right? So they've also entered Mumbai. So they're targeting these Delhi and Mumbai, right? These metro cities which have huge population densities. So they need a lot of hospitals, right? It obviously earns most of its money through the hospital network, right? It also has a diagnostics arm and a home healthcare arm, but those are, you can think of those as more, being a part of the ecosystem, or being a part of um, just trying to maybe helping in their main business, which is the hospital services business, in terms of okay, a diagnostic happen, and then you can refer that person to the hospital chain, or you're doing some healthcare for some person, and then if something happens, then they can be transferred to the hospital chain, right? So these two businesses anyway are very, very small in nature and can't be seen as or shouldn't be seen as like high growth engines which can take over, or a product mix shift which is playing out here. It's not really the case, right? It primarily earns revenue through treating inpatient and outpatient across 22 hospitals, 5,200 beds. Now that's an important number, because when we discuss the growth of this company, we will use this number a lot. 76% of the capacity is concentrated in metro and tier 1 cities, data backing the understanding that we have of the company, that it is a metro focused player. The business focuses, okay, so there are a lot of things happening, but now we get the gist, or we take the main point from this section, that it's mainly a hospital, it's mainly earning its revenue through the hospital services, right? Now, if we look at the business momentum and the revenue momentum, what we see here is almost 21% CAGR from FY22 to FY25, right? FY22 was kind of like a COVID normalization period, so they had this 57% jump, but since then it has been a 20% growth engine in terms of revenues. That's pretty good for a big company like Max, but at the same time, it also commands those kind of valuations, or it has commanded for a long time those kind of valuations as well, right? But we're focusing on the business aspect, right? So revenue scaled 21%, driven by a combination of ARPOB appreciation and volume from bed additions, right? I think this might be a good time to discuss the key variables of the company first, before going back to the revenue analysis. So some of the ways in which we can understand or track a hospital business is some of these things which are coming up. Maybe the top two make a lot of sense, which is the occupancy rate and the average revenue per operating bed, right? So if you have 100 beds and 80% of them are occupied, and for each bed you are earning, let's say, 10 rupees a day, so that kind of gives you the total revenue, which will be 80 into 10, which is 800 per day, right? That is the revenue per day that a hospital is making. And to increase this revenue, either they can improve the occupancy rate, or they can improve the average revenue per operating bed. So in order to understand the growth of a company, we can see one level deeper with these two metrics, right? So occupancy, it's kind of one of the best in the business, but it's at around 75 to 77%. It's improving. Oh, sorry, 75. It's kind of ranging around the 75 to 74% mark. And what has happened is the occupancy has remained strong, right? Generally above the 75% area, right? But quarterly fluctuations are being seen due to the new capacity integration and seasonality, right? So a lot of new hospitals, new additions are being done, which actually in the starting have very low occupancy rates. So that's kind of affecting the bigger reading on this metric. But if you see the bigger trend and if you just zoom out, having 75% occupancy is not bad, and this can probably stretch. If it stretches to like 80% on a group level, I think that's the limit to which Max can run. And if they go above that, that's, I don't know, there's something wrong with the data probably. Um, Now, if we think of the average revenue per operating bed, it's almost 77 to 78,000. Again, this is super premium in terms of their peers and the industry in general. It has shown stability, and of course, this higher RPOB is because it is located in metro cities, is because it is a multi-speciality, super specialty hospital offering surgeries, high-end surgery. I mean, not to call them high-end, but you know, higher revenue generating surgeries in the department of oncology and cardiology. So definitely the nature of the model, of the strategy reflects in these numbers, right? And it's important to understand that it's not good or bad. It's just the approach which Max has taken as compared to some other hospital chain, right? And it is working out for them in a way. So now that we understand RPOB a little bit more, so then we understand that the revenue of 20% growth has come from RPOB appreciation. It has come from bed additions from these new hospitals, right? And I think now that they have reached these high occupancy rates and these high RPOB values, organic growth will come, but it might be slower. And most of their growth will now, or the business has shifted into an asset heavy, capacity led growth phase. That is something which we can see. That is something which is different in the last 5 years as compared to how the next 5 years might play out for Max. The hospital network, the revenue trajectory mirrors the consolidated trend with the most meaningful inflection in FY25 with newly acquired campuses starting to contribute, right? Mature hospitals are growing at 15 to 18%, plus those inorganic contributions are already starting, right? And the other two streams are very small, so there's no point going deeper into it. And neither is it very helpful to go into the mix shift of the business, because it's not really a mix shift kind of a story. Right now, if we see the quarterly score, it wasn't that great and we saw a deterioration, right? Let's try to understand what happened in the latest quarter. The network successfully navigated a high friction quarter marked with a standoff with the insurance payers, right? Some of the payers, they didn't want to pay Max and there was some standoff, and so you know the people, so Max is, so if you see the payer mix, right? If you see the payer mix, there is people with insurance, there is people under the government insurance schemes, and then there are people who pay out of their pocket, right? This institutional insurance works like, if you have an insurance, then you have certain hospitals under that insurance plan which you can go to, right? Now, if the hospital is having problems with the insurance company will remove that hospital from its impaneled hospitals. And so the person, instead of going to Max, living, let's say, in Dwarka, where I live, he might go to AIMS, or he might go to another private chain like an Apollo, or like a Narayana Health, or a Medanta, which is very famous in Gurgaon. So that's something which they navigated in the last quarter. Um, the management proactively managed the payer mix by shifting capacity to institutional payments patients during insurance disruptions to maintain 74% of occupancy on an expanded bed base. This is important. 74% occupancy is down, but it's also on an expanded base. So you have to give it time to kind of let them ramp up. 10%, 4%, it's fine. Lower margin, it's fine. They're in a ramp up phase. And that's kind of what gives it a lower score as well, right? The guidance, the management is saying, and we'll go into a deeper dive when we discuss the guidance in detail. But for this quarter, the management said that they see strong visibility with the 200 beds at Max Smart awaiting occupancy certificates by Feb end. The board also approved a 260 bed expansion at Dwarka and a 450 bed project. I mean, these numbers are kind of crazy, but yeah, like having land in Saket, having land in Mumbai, Nanavati, which are like like Mumbai doesn't have land. Obviously, Delhi also doesn't have a lot of land. I mean, yeah, in Dwarka it does. But yeah, these are I mean, you can see that their strategy of being a super specialty metro centric hospital is kind of driving these decisions to keep expanding into these centers. And as I said, hospital business is tough, but once you form a brand, once you have a few hospital chains, then through brownfield additions, you kind of get a more like a the growth is kind of favorable for you as a hospital as compared to a pure greenfield project, which is much tougher, with the payouts are much later. CGHS tariff revisions are also there, so the company is going to get some benefits from that, right? So basically, the company, as I said, the insurance, the payer mix is insurance, then CGHS, then people who pay out of their pockets. And in terms of CGHS, there's been a revision of prices. So if people under that scheme are going to Max, the government is going to kind of pay Max a little bit more for those surgeries, right? So it's beneficial for the company, and we'll see this in the growth prospects, where it's kind of the third catalyst. It's got a great score, right? For a big company to kind of grow at 15 to 18, probably 20 to 22% is really good. It's, you know, like with more mass you move slower, but Max is kind of being aggressive, and it's kind of the industry also, you know, the hospital industry has been growing at these double digits for a decade now, and it should continue to grow in that way, because we're still not at the amount of beds per person that we should have, right? So the growth prospects, the big one is this: they're targeting 8,000 beds by FY28, which is almost 4,000 bed expansion. Huge, right? Then there are obviously individual greenfields and brownfields and individual greenfields, which will be a part of that bigger plan. But the bigger plan is bed expansion. That's how Max is going to grow from here, right? They're already the best RPOB, they're already the best occupancy. They can't do much about that, other than kind of maintaining it, because those will be dragged down by these new additions which are coming in, right? But yeah, the big growth story with Max is this increment, is this 8,000 bed target which they have, right? And we can see that the brownfield bed commissioning in Nanavati, in Mohali, Maxmart, all of this is happening. Gurgaon, there's a greenfield happening. CGHF tariff revisions is going to be revenue accretive for them. And basically, we can see like a 15 to 20% growth journey for Max. And this is also what the guidance is from the management, right? If you see there, the guidance style is directional. Of course, they don't provide exact revenue or margins or anything like this, but the big picture growth guidance is they want to reach 8,000 beds by FY28. adding 4,600 beds in the next 3 to 4 years. Total potential is 14,000 beds, driven by significant capacity expansion projects. Total operational beds to be 6,000 and 8,000 by FY28. And this is the source is the latest con call of the company, right? So this is the what the company is also guiding us towards, right? In terms of current year revenue guidance, not much has been said. They just said it'll be a tremendous year. It's been a good year, not as tremendous as FY25, where or I'm sorry, FI. Well, okay, this is not great data. So the data here is more on the guidance towards the additions rather than revenue, right? So I will check on that. The credibility verdict for the management has been target mixed. I would say it's mixed to little credible as well. The company kind of also has a key man risk in the way that their CMD and their around CMD Abhay Soy, right, who drives strategy, capital allocation, acquisition. He's really been driving Max in the last few years to kind of get this brand, to kind of get this performance which it has done, right? So I wouldn't call the management, I mean, I would call it a little better than mixed, to be honest. And then there are other guidance trackers. Some are running delayed, some have been revised. So we can, like Gurgaon is running a bit delayed. It was to target completion by Q2 2 quarters ago. It's been delayed by almost 3 quarters, right? Which happens, not easy. Greenfield projects are not easy. When we think about the moat of a hospital chain and Max especially, we can think of it in terms of how we think about moats for any company, right? Let's see. Does it have a brand? It's one of the largest hospital chain. It's among the top 2 by revenue. It does command a premium in terms of RPOB, right? Patients referring doctors actively would choose Max for the complex tertiary procedures like oncology, cardiology. International patients are 10% of the revenue, right? This is a big one. So definitely if international patients are coming in, they wouldn't really have a problem with it being a 70,000 or 80,000 RPOB hospital, because it's anyway cheaper, maybe in from where they are coming from, right? So there is a brand, like in my head as well, Max stands for higher quality, and this is one of the psychology elements where just because it's higher price, our brain kind of associates it with higher quality. But that's it unfortunately is or fortunately is true in the case of Max as well. Is there stickiness? If there is doctor-patient relationships, there will be stickiness. If there is insurance empanelment, there will be stickiness. If, as I said, the Max Home and Max Labs ecosystem, if you're a part of that and you want to avail medical services, you would go to a Max. So there is some switching costs. I wouldn't call it too much also. And the scale is definitely there. What's missing are network effects, right? And regulatory and legal supports for a hospital chain, right? So that's what kind of leads us to this verdict where, yes, Max, maybe compared to other hospitals, does have a narrow moat. There are high entry barriers. Tomorrow I can't go and open a hospital that easily. The fragmented buyer base, structural bed deficit, create a tailwind, a supply constrained environment where premium position chains hold pricing power, right? So there is a narrow moat with this company. And with that, we kind of come to the closure on this discussion of Max, the business of Max as a company. There are risks to the moat also around the company in general. Also, we can think of it. Government pricing controls, if they come in on RPOB, key man risk, greenfield execution, it's not easy. Insurer relationship disruption, we already saw what happened. Doctor attrition, now this is another important variable in this industry where there is a shortage of high quality doctors. And yes, there are less beds in the country per person, but that also means there are less doctors. And with the aggressive way these hospitals are making more more beds, we also need higher quality and a large supply of doctors. So when that doesn't happen, there's a lot of fighting between these chains for the kind of the better or the more successful doctors, or doctors who kind of also have a brand in themselves. So that's also a risk, but I think Max might be a beneficiary for that, because a doctor working at Max might, you're already working at the premium high RPOB hospital. So it kind of plays in Mac's favor, where they can use the brand to kind of influence the higher quality manpower and supply. And obviously there's a cash flow positive company. They have the money, maybe, as compared to a smaller hospital chain, to kind of support the higher payments to these doctors as well. So it might actually be a risk. It's a risk to every hospital in this country, but maybe a little less for Max, right? And with this, we come to the conclusion of analyzing Max. It's scoring number 4 in the healthcare companies out of 7. Quarter rank is in the lower percentiles. Growth rank is actually in the higher percentiles, which is nice. So it did have a painful quarter, but overall the growth looks really good for a heavy Nifty 50 company. And yeah, that's my first video on the Nifty 50 series. I'm going to be analyzing all Nifty 50 companies one after the other. So yeah, I hope you enjoyed this one, and I'll see you soon. Thank you.